Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 12th of February 2020, and on Monday we produced a video entitled Euro Falls Again as Dollar, Equities and Gold and Silver Rise, where we highlighted that the euro versus the dollar was then standing at $1.09, equaling €1. You see, on the 2nd of February 2018, just 2 years ago, they were $1.25 to the euro. This is by how much the dollar has strengthened against the euro since. Well, today, the rate between these two currencies has worsened slightly as of 2030 GMT. But there have been one or two interesting announcements, one about euro industrial production for December, which appears to have been considerably hit, and another article about the euro value falling further against other currencies, and the dollar in particular. Let's take a brief look at both of these articles. They're relatively short, but convey interesting insights as to what may be happening in Europe, and thereby affect the value of the dollar and the price of gold and silver ultimately. Bloomberg article, Euro area industrial output slumps most in almost 4 years, by Jana Randau, February the 12th, 2020, 10:56 a.m. GMT, Bloomberg. A deep slump in euro area industrial output at the end of last year highlights the scale of the challenge the sector will face in 2020. The 2.1% drop, the steepest in almost 4 years, will raise doubts about a meaningful rebound in momentum. The economy barely expanded in the fourth quarter, and the outlook at the start of the year has been dented by the coronavirus. While some risks to the outlook diminished after the United States and China agreed a trade deal and the United Kingdom left the European Union without much disruption, the virus outbreak that started in China has pushed the world into a new crisis. Companies have shut factories and warned of disruption to supply chains and a hit to their profits. The European Central Bank is on high alert. Chief economist Philip Lane said on Wednesday the economy could experience, quote, a pretty serious short-term hit, unquote. And President Christine Lagarde said policymakers are closely watching for any broader impact. Some of the slump in industrial production in December could be due to temporary factors. France was hit by strikes and protests that month, while Germany plunged is partly linked to the impact of the holidays on construction. Even though their next monetary policy meeting is not for another 4 weeks, speculation has started that the Governing Council may at least consider easing policy to stimulate the economy. Even before the outbreak, the euro region was expected to only grow a meagre 1.1% this year. The ECB, or European Central Bank, will update that projection in March. End of article. Bloomberg article by Jack Pitcher, Greg Ritchie and Ruth Carson, February the 12th, 2020, updated 7:57 p.m. GMT. Euro slumps to lowest since 2017, with economic woes in focus. The euro slumped to start 2020 is gaining momentum amid growing concerns that Germany could be headed for recession because of the lingering effects on the global economy from the coronavirus. The common currency fell to the weakest since 2017 versus the dollar Wednesday, and to levels last seen in 2016 against the Swiss franc. It sank as much as 0.5% to $1.865. Concern about German Chancellor Angela Merkel's succession plans and a dovish European Central Bank have weighed on the euro, which investors are looking to as a vehicle to fund riskier positions. The S&P 500 index rose to a record in New York as the euro sank. Deutsche Bank AG now expects a slight contraction for Germany in the fourth quarter, as the virus exacerbates an industrial slump. Euro area industrial output posted the steepest drop in almost 4 years at the end of 2019, data showed Wednesday. Quote, the narrative of slowing economic activity is key, and today's industrial production data is key, unquote, said Monex Europe currency analyst Simon Harvey. Quote, many are suggesting further easing may be on the horizon. Combine this with the easing risk climate, and the euro seems to be suffering as the funding currency, unquote. Traders are dialing up expectations that the ECB may need to lower rates to counter the economic fallout from the coronavirus. Money markets are pricing in around 6 basis points of a cut by end 2020 versus a 0 chance of easing a month earlier. Credit Agricole downgraded its forecast on the shared currency Wednesday, following similar moves by JP Morgan Chase & Co. and RBC Capital Markets last week. Fourth quarter growth data for Germany is set for release on Friday. While the median prediction is for a 0.1% quarterly growth, almost 30% of survey respondents forecast a contraction. Quote, persistently weak growth will keep pressure on the ECB to deliver further easing, posing downside risks for the euro, which is already weakening in anticipation of potential policy action, unquote, said Lee Hardman, a foreign exchange strategist at MUFG Bank Limited in London. Still, even with the euro down about 3% against the dollar in 2020, a majority of forecasters still predict it will strengthen by the end of the year. The median estimate in a Bloomberg survey is for the euro to trade at $1.14 in the fourth quarter. End of article. So, why are we concerned about this? Well, the bottom line is that we are concerned about the industrial demand for silver. Today, for example, silver has fallen back again to $17.47, close to our much heralded sweet spot of $17.50. And we have said previously that if silver falls below this $17.50 level and holds, it may then gravitate towards $17 exactly. Now, whilst the coronavirus is propping up the price of gold and silver to some extent as a monetary metal, it is not unreasonable to assume that silver is being adversely affected due to a reduction in industrial demand. With Chinese factories closed and people's mobility reducing in order to help contain or isolate the virus, this is undoubtedly having a negative effect on production, and we shall see in the coming months the actual magnitude of that effect. And of course, ironically, in addition, if it does appear that the coronavirus is being tamed, controlled, or restricted in some way, then the fear factor purchase of gold and silver will reduce, and silver will have potentially a double negative hit. Certainly short term. Now, it will come as no surprise to our listeners that with gold, therefore, currently at $1,565 and silver at $17.47, we have a gold to silver ratio now of 89.5 to 1, just half a point away from the prediction we made many weeks ago to expect a 90 to 1 ratio again. While the likes of Mike Maloney and David Morgan and their blind followers all telling us that the gold to silver ratio is going to revert very soon to 70 to 1, then 50 to 1, and we even saw Mike say on a video the other day to expect it eventually then to fall back to 15 to 1. What planet are these people on? Ask yourself the question. These guys need to sell silver or silver-related products, books, recommendations, charts, newsletters, etc. So of course, it makes sense that they come out with this nonsense in order to encourage those very purchases. So be warned. Please be warned. Do share your thoughts about the EU and the euro, and whether you believe the virus is being contained, as the article suggests. Meanwhile, we had hoped to get our silver 2020 forecast published in the Inner Sanctum last night. But late yesterday, we had a call from a major silver dealer in the United States, actually putting a number of issues that we had into perspective, which changed our outlook yesterday. Not dramatically, but sufficiently for us to delay the publication. It was, if you like, the last piece in the jigsaw that we needed in order to have what we believe to be a pretty complete picture. So we are sorry to disappoint, but our 2020 forecast for silver will be out tomorrow in the Inner Sanctum first. After all, we would rather, to be frank, delay production of that video by a day or so, rather than publish it and then have to retract or amend it shortly afterwards. Meanwhile, please don't forget, though, that we have published our gold forecast for 2020 on Sunday, and we've provided a link to this in the description box below. And our assessment of that has not changed. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you are notified of videos as and when they are published. And without creating any form of alarm whatsoever, there have now been a number of infections in the United Kingdom of the coronavirus. In China, over 1,100 deaths have now occurred. And whilst it is being muted, that at least the rate of growth seems to have slowed down, it's too early to tell. So we've put some preventative products that you can purchase quite cheaply on Amazon in the description box below. There are other products, some may be even better than what we have been able to find. But at least it will give you an idea of the sort of things to look out for. And if you haven't already done so, please listen to some of the videos we've produced previously on this subject, where controversially Greg has given a number of tips. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.